After another rejection from 69K, the order book shows Bitcoin liquidity on the move. We're back in a consolidation zone, but this liquidity movement might be creating some opportunities for traders. Hey guys, it's Keith Allen, and not really too terribly surprised about what we saw yesterday. Things look to be shaping up for Bitcoin, but just like we saw on the 31st on the monthly close, on that attempt to break out that 69K level, we saw a block of bid liquidity get dropped down into the range and hammer price back down. We saw exactly the same thing yesterday. Let's take a look at fire charts, and we'll look at the candle chart, and we'll see what's going on here. I'll show you that move, and then we'll look at some of this liquidity movement and see how that may have things shaping up. By the way, I've got another live stream scheduled today at noon with the Blockchain Banter crew, with Dr. Richardson, with Jen, and Crypto Corio. Those are always great conversations, so I hope you'll plan on coming back to join me at noon for that one. And of course, if you like these streams, do me a favor, smash all the buttons, especially the subscribe button, and by all means comment. I do also have questions open. If you guys comment section open on YouTube, if you guys are watching on YouTube, you can engage with me here. So let's first switch over to the fire charts, and we can see what that block of liquidity is that I was mentioning that dropped into the range yesterday. And when you see these kinds of moves happen, you can really get a sense of how price is going to react. And that's why I say that using order book liquidity like this and data visualization tools like this really give you an edge. So with that, let's take a look, and you can see it right here. It's still on the 24-hour chart here. This block dropped into the range right here and hammered price after crossing above, we crossed above 69K, even above 70K. And this came down, hammered price back down. As you can see, and I'll move to the weekly chart so we can get a little bit better view. We just never, we've had some good consolidation here above 67K. But we haven't seen a tremendous amount of liquidity come in to support that, right? When we did have it come in, it helped push price up, and then look, it disappeared. Okay, so and sometimes it moves up, and sometimes it moves away. And likewise, we're seeing the same thing on the upside, right? For this move to happen yesterday, we saw a bit of roof pulling, if you will, to create that opportunity. And so what we're seeing right now is very similar. Look at this, right? We had a big concentration of ask liquidity up here at 72K that came in briefly. And now we see that being removed, as well as some ask liquidity from this 750 range also being removed, and things thinning out right here, which creates opportunity. The problem is we're not seeing enough come into this range to actually support a sustainable move. And if we zoom out even further, we can really get a sense of what's overhead and what is beneath. And this is the part that does not look especially good for bulls. Don't want you to panic here, because we do have some very bullish signs that I will show you here in a second, but keep this in mind, because we can speculate about the levels on the candle chart and the technical indicators all day long. But what we see in the order book is truth, is absolute truth, okay? And the truth is there is a heap of liquidity overhead and not much down below. So the fact that this is thinning out some, the fact that things are coming out of the upper range and consolidating consolidating here, does serve the purpose of tightening up the consolidation range, which we see right here, right? From, we've been in a very wide range up here, nearly to 74K, which is the new all-time high. Our local low is at 56.5 actually. And so this, I like that things are compressing here, in the fact that we're not targeting the all-time high just yet. We have a ceiling around 71,500, 72K range is really, really heavy stacked, and really laddered all the way up. We have nearly 200 million, but it was above 200 million not too long ago. And so the fact that that is, some of this liquidity has dropped into the range means this is eroding. But we also see that erosion on this side, right? Where's the buy pressure? And I really want to see more here. It's when we get these deeper concentrations that help Bitcoin move, right? And at the moment, the bright spot is on the upside, and we see what happens as price tends to revert from those deep concentrations of liquidity until something breaks here. So that's the wide view. I think that eventually we do get there, but for now, it just doesn't seem like right now is the time. Now, what you can also notice if you look closely here is that some of the bid liquidity here has been stepping up, right? So that's good to see. Let's take it back down to some lower time frames here. Actually, I want to go to the weekly. I'm having I don't know what's going on with my internet these days, but it's really been lagging. So bear with me while I reload this. Actually, I'll move over to the candle chart real quick. It looks like we have just nosed back above that 69K level, and this is the bullish side I'm going to show you here. What we have is a series of tests on technical support. And after, first of all, this RS flip at 69K, we have been up here literally dozens and dozens of times, and not had a sustainable move, right? And the wicks below, I say, are signs of weakness. They lead to breakdowns. I'm looking for full candle bodies above that 69K. We didn't get it yesterday. We're not getting it today, so we'll have to look again tomorrow to see if this is a sustainable move. But that upside liquidity that I showed you that was just lifting has created the opportunity for price to move up here. But what I like on the bullish side here on the support side is that we had one candle here that flipped the blue 100-day, the green 21-day, and the red 50-day moving average all in one shot. Okay. But then we had a retest. The retest to the 50-day, retested it 2 consecutive days, and back up. And since then, we've had some what I consider to be better consolidation, right? So we were way down here. Here's that local low of 56.5. Don't want to lose that one. If you do, we're going down here, potentially here. If you look at what's happening here on the 21-day moving average, which is one of my favorites, 21-day and 21-week moving average, I really like a lot. They're very telling, in my opinion. And we are now, we've tested this 1, 2, 3, 4, and this is our 5th consecutive day above this 21-day moving average. Will that hold? That number right now is just above 68K. Staying above 67 is good. Technically, above 65K, which is the 50-day moving average here, would keep me pretty happy. We also see a bit of momentum shift happening here on the MACD, as well as on the trend precognition A1 slope line, where that trajectory seems to be changing a little bit. We want to see this thing tick up to really get a sense of bullish strength. So that means since it hasn't flipped green yet, and this hasn't pointed up yet, let's see what's doing there, right? This actually is nearly flat. So that means momentum not that strong here in this moment, but it's getting some help from this resistance that has been pulled. All right. And we do see some liquidity coming up into the range, but it's not thick. It's not heavy. So, I can apply some contrast that doesn't change the value that's there. It just makes it easier for you to see. What we need to see is more coming in above this level and stacked. I want to see solid lines, orange, yellow, white, right? White being the highest level on the chart here. And so we want to see the brighter side on the bid side for bulls to have a chance at cracking these levels here. They're getting some help at the moment from what I call roof pulls. That's when, a rug pull is when bid liquidity gets pulled, and a roof pull is when ask liquidity gets pulled. It happened yesterday before we saw that move to the upside, and it's happening again today. Are they setting a trap? That's the question. And chances are they're setting up a short squeeze, because so many people have seen this rejection at 69K, and they're like, oh man, going to short 69K. And guess what? We could see repeated attempts up in this range. So be very careful with your leverage if you're shorting this here. We also obviously see things dwindling here on the bid side, which obviously would help those shorts, but it's not yet decisive. It's not yet decisive enough to go, hey, we're going to go to 66 or potentially even 65. Those ranges are solid, right? There is definitely better bid support, and not a lot, by the way, but there's better bid support at that level than we see here. This range is good, but it's going to get absorbed very quickly if somebody dumps. So we need to be mindful of that. Again, this was some of the move we saw yesterday. This roof pull here, and they actually moved price up. So that's not a complete roof pull; it's just an adjustment. But they did raise the roof, as they say, to create this opportunity to move up. And we're seeing the same thing happen right here. So, where do we go if things continue? Well, let's zoom. Let's go back to the candle chart here. I've been saying for quite some time. Well, I've been saying since here. This to me, this whole structure. If we took this to a weekly chart, this whole structure here, to me, looks like a cup and handle. I'm sure have some of that somewhere in here. Let's see where that might be. I don't want to take a bunch of time finding it, but I could probably draw it faster here in a second. Give me just a moment. See if I can find it. Okay, so this is the handle growing and needs to be adjusted. And maybe I have the cup in here. No, I don't. So let me just draw a new one for you. Tools, baby, tools. Show me the tools. All right, this is going to be a horrible drawing, but I'll give it a shot here. All right, so this to me looks like a cup and handle double topping at the all-time high, and roughly something like this. That's obviously not perfect, but it's close enough to the pin for government work. And this is the handle growing here, right? So this is a classic cup and handle pattern that seems to be playing out here. Now the handle has obviously changed. And it's not going to let me draw a new one there. So let me you get the gist of things, right? This is the handle here, and now let's see if I can find that tool really quick. Okay, here we go. So this is come down to the 21 week moving average. By the way, I told you earlier how much I like that level, but I think that we could potentially continue to range here a bit before we get that real move to the upside. And whether that takes us to the all-time high this first attempt, or we need to consolidate here. Personally, I'd like to see some consolidation in this range above the 2021 top. That's that 69K. I'd love to see some consolidation in here before we go after the all-time high, because I think that is a healthier approach to making that move. Whether I get it or not remains to be seen. Something I'm noticing here, now that we're on this weekly chart, notice the declining volume here. The declining volume is not a sign of strength. Notice that declining volume. Meanwhile, even though we have this declining volume, we do have something bullish, and that is that we not only have 15 consecutive days of ETF flows on the U.S. side. We now have new ETF players coming into the market. I think yesterday was a high for Hong Kong ETF flows, and now we have Australia launching Bitcoin ETFs tomorrow, which is interesting. So all of these new ETFs coming in around the world, I think number one, it tells us that demand will be increasing, and it also tells us that maybe some of these jurisdictions are taking a lead from the U.S. regulators. Here's the U.S., by the way, past 15 consecutive trading days, net positive on inflows. So the fact that it's not just a big, massive spike like we saw, huge volatility like we saw in the beginning, I'm okay with that. I'm just, I think that this feeds the macro narrative that there is increasing demand on Bitcoin, and so I'm in tune to that. Right, that kind of feeds my massive, my major view of things on the macro. right? And of course we're post halving, so that should all kind of play into the fact that we should be at some point breaking out into new all-time highs. These consolidations, these corrections and consolidations are very, very common around halvings. So I don't want you to think that we can't go lower, because we can. I just don't think it's tremendously likely. However, that said, now that we're on this weekly chart, look at where the 21-day moving average is. That's at 60K, just above 60K, and look where the 21-week moving averages and the 50-week moving average now coming into the range of prior consolidation, which I've been saying since this level was really an area that we should have retested. We should have retested here at 50 to 52K too. We didn't do that. But this to me was the strongest level on the chart that we could have seen up in this range. This is where things really got good for Bitcoin, was around this 25K range. This was the consolidation that we really should have known was the way, because of this break back above these key moving averages. Look at this. We took out the purple 200-week moving average, the blue 100-week, and the green 21-week moving average in one candle here on the weekly, and that really was the sign that things were going to fly, and they did. So, hindsight we learned from. Fortunately, I did pick up some sats here that I'm holding on to, but in hindsight, I wish I had held on to more of what I bought in this range. Anyways, back to where we are now. Let's go back to fire charts to get another look at things. You can see whales are buying. That's also net bullish, but just know that these guys are trading this range too. So this isn't necessarily accumulation. This could just be normal trading here. To get a sense of accumulation or distribution, we zoom out to higher time frames, and you can see that there has been some selling from the highs and some buying from the lows. And at the moment, the trajectory is upward. But look at all of this dense ask liquidity above. This is resistance, and this is going to be tough to beat until we see more coming into this range. Above 67K, certainly above 65K and higher. Here was that 60K that I showed you where the moving averages are converging. The 21-week moving average is down here, and the 50. What did we look at? The 200? No, the 50-week moving average is currently down around this range right here. Not, as you can see, there's really no sentiment for that move at this point. But if we should lose 60K, be prepared for that. In terms of when we go after an all-time high, I just don't think that move is going to happen until we see greater bid liquidity above 65K, better yet 67K. And of course, the real thing I'm looking for is a confirmed RS flip at 69K. Flip this level, and then talk to me about going after this all-time high. And then we can talk about price discovery from there. Until that happens, we stay in the range. That's my perspective. You may have a different one, and that's totally cool. I'm just sharing and I'm not giving you any advice. I'm just sharing you what I'm seeing in the charts, and you do that with that information as you wish. I'm going to wrap this one here, guys. I've got another live stream coming up today at noon Eastern time with the Blockchain Banter crew, as I mentioned at the top. It's always an awesome conversation, and what I love about it most is we have some different perspectives coming from Jen and Dr. Mark Richardson and Crypto Corio, who's just a phenomenal data scientist with just so much information to share with us. So I always look forward to that conversation, and I hope you guys will come engage with us on that as well. And with that, we'll wrap it. If you like the streams, please do me a favor, smash all the buttons, hit that bell up top, and make sure you subscribe so you don't miss any of these live streams. I try to do them every day, Monday through Friday during the normal week. And I've been consistent with that, I think, pretty much since the beginning of the year. So I appreciate having you guys along for the ride. I appreciate the support you're showing me. And please drop a comment in there as well. I love the comments, and I will always respond or engage with you guys. So with that, let's wrap it. I'll keep in tune to the charts through the day, and if I see something developing, I'll do my best to let you know. Otherwise, I'll be back in a couple of hours with another live stream with Blockchain Banner. We'll see you then, guys. Have a great day.